Your savings are disappearing. Right now, while you're watching this, the largest banks in the world are quietly moving billions of dollars out of America every single day. And they're not telling you why. This exact pattern has destroyed 3 global superpowers in the last 500 years. Spain collapsed, the Dutch Republic fell, Britain lost everything. And every single time there was a 36-month window between when the smart money started leaving and total economic collapse. We're 15 months into that window right now, and most Americans have absolutely no idea what's coming. China just sold over $300 billion in US Treasury bonds. Not over 10 years, in the last 18 months. Japan, the largest foreign holder of American debt, dumped $220 billion. Saudi Arabia is selling. Switzerland is selling. Belgium, France, all quietly reducing their exposure to the US dollar. And it's not just foreign governments. BlackRock, the world's largest asset manager controlling over $10 trillion, has restructured their portfolios to reduce US Treasury exposure. JP Morgan did the same. Goldman Sachs lowered their US equity recommendations. This is called capital flight, and it's the 3rd stage of a 4-stage economic collapse pattern that's happened 3 times in modern history. Same stages, same timeline, same devastating outcome. But here's what should terrify you. Most people don't notice until stage 4 hits. And by then, it's too late. Your savings are gone, your retirement is gone, your purchasing power evaporated. The last time this happened was Britain in the 1970s. They went from global superpower to begging the IMF for a bailout in less than 30 years. The pound lost reserve currency status. The middle class was destroyed. It can happen here. Stick with me for the next 18 minutes because I'm going to show you exactly what this pattern looks like, why it's unstoppable once it starts, and most importantly, what you can do about it before time runs out. Before I show you the evidence that we're in stage 3, you need to understand the pattern, because once you see it, you can't unsee it, and you'll realize it's playing out right now in real time. Every major economic collapse in the last 500 years follows the same 4 stages. Not similar stages, identical, like a script that history keeps performing over and over. Stage 1, ascension. A nation becomes the center of global finance. Their currency becomes the international standard. Capital floods in from everywhere. Everyone wants a piece. This stage lasts 50 to 80 years. America entered this phase in 1944 with the Bretton Woods Agreement. Stage 2, overextension. Success breeds arrogance. The government spends beyond its means. Wars, social programs, military expansion, all funded with debt. But nobody worries because markets keep rising. This stage lasts 20 to 40 years. For America, this started in 1971 when Nixon ended gold convertibility. Stage 3, silent exodus. This is where we are right now. The smart money sees the balance sheets and starts quietly moving capital out. No announcements, no press releases, just systematic, calculated rotation into safer jurisdictions. Foreign investors reduce holdings. Wealthy families diversify internationally. This stage lasts 18 to 36 months. We're roughly 15 months in. Stage 4, collapse. The currency loses reserve status. Inflation explodes. Interest rates spike. Asset prices crash simultaneously. Banks fail. Pensions evaporate. And the middle class, the people who kept their wealth in dollars, get completely wiped out. This is the end game. Now let me prove this isn't theory. Let me show you what happened the last time a global reserve currency collapsed. Britain, 1700s through 1976. And pay attention to how similar this sounds to America today. At its peak, the British Empire controlled 23% of the world's population and a quarter of Earth's land. The pound sterling was the global reserve currency for over 200 years. If you wanted to do international business, you needed pounds. Period. London was the financial center of the world. Sound familiar? Replace pound with dollar and London with New York, and you've got modern America. Then came World War I and World War II. Britain spent £44 billion fighting those wars, over $600 billion in today's money. Government debt exploded from 30% of GDP to 130%. That number is critical. Remember it. Britain hit 130% debt to GDP and the system started breaking. They tried staying on the gold standard, failed in 1931, tried again, failed in 1933. They were printing money faster than they could collect taxes, just to keep the lights on. The math stopped working. And here's when stage 3 began. 1949. Quietly, with no fanfare, major British corporations started moving operations to America. Unilever, Shell, British Petroleum. They didn't shut down in Britain, they just shifted investment, built new headquarters in New York, redirected capital across the Atlantic. Wealthy British families transferred assets to Switzerland, to America, to Canada, anywhere that wasn't overtaxed, overregulated, declining Britain. Scientists left, engineers left, entrepreneurs left. The brain drain accelerated. By 1960, foreign investment in Britain had fallen 62% from pre-war levels. The money left, the talent left, the future left. That's stage 3, silent, systematic, unstoppable. September 1967. The pound devalued 14.3% overnight. You go to sleep, wake up the next morning, and your currency is worth 14% less. Just like that. The government ran out of foreign currency reserves trying to defend the exchange rate. Game over. 1976. Britain, the empire on which the sun never set, went to the International Monetary Fund, begging for a bailout like a third world country. The pound lost reserve currency status. International trade shifted to the dollar. Britain's dominance ended forever. So that's Britain. Now let me show you why America is following the exact same script, beat for beat, with terrifying precision. America's national debt just hit $38.4 trillion as of December 2025. That's up from $36.1 trillion in January, a $2.3 trillion increase in just 11 months. We're adding debt faster than at any point in American history outside of wartime. But that's just federal government debt. Add in corporate debt, household debt, student loans, credit cards, mortgages, medical debt. Total debt in America is over $100 trillion. That's 370% of GDP. For context, Spain collapsed at 200%. The Dutch Republic fell at 250%. Britain lost reserve status at 130%. America is at 370% and climbing. The government now pays over $1 trillion per year just in interest on the debt. Not paying it down, just interest. That's more than we spend on defense, more than Medicare. Just servicing debt that can never be repaid. And here's the kicker. When interest rates were at 0, we could barely afford that. Now rates are higher. Every percentage point the Fed raises rates adds hundreds of billions to the interest bill. The trap is closing. So how does the government pay that interest? They print money. The M2 money supply increased from $15.5 trillion in February 2020 to $21 trillion by April 2022. That's a 40% increase in 26 months, the largest monetary expansion in American history, ever. But wait, if we're printing all this money, why hasn't the dollar collapsed yet? Because we're still in stage 3. The collapse happens in stage 4. Right now, we're in the warning phase, the exodus phase, and the exodus is already underway. Remember stage 3 from Britain, capital quietly leaving. That's happening in America right now. Here's the proof. China held over $1 trillion in US Treasury bonds in 2013. Today they hold $760 billion. They've sold $300+ billion in US government debt. Not speculation, public record, Treasury Department data. Go verify it yourself. Japan, America's largest foreign creditor, reduced their Treasury holdings by $220 billion since 2022. Saudi Arabia is selling, Belgium cut exposure, Switzerland selling, France reducing. The list goes on. But here's what should concern you most. If all these countries are selling US debt, who's buying? Take a guess. I'll give you 5 seconds. The answer? We are. The US government is buying its own debt. The Federal Reserve prints dollars and buys treasury bonds. That's called monetizing the debt. It's what Weimar Germany did. It's what Zimbabwe did. It never ends well. Pause for a second. If you're watching this and thinking, this can't be real, go to treasury.gov right now. Look up the TIC data, Treasury International Capital. It's all there. Foreign holders selling. I'll wait. Britain wasn't the first. This pattern is 500 years old. Let me quickly show you the other 2 examples so you understand this isn't coincidence. It's mathematical inevitability. Spain, 1500s. At its peak, the most powerful empire on earth. Spanish galleons loaded with gold from the Americas. The Spanish real was the global reserve currency. Then King Philip II started spending. Wars with France, England, the Ottomans, the Dutch. By 1550, government spending was 300% of tax revenue. Sound familiar? They were paying 40% interest rates on loans. That's not strength. That's desperation bleeding through official documents. 1555. The smart money started leaving. Banking families moved to Genoa. Merchants relocated to Amsterdam. They saw the balance sheets. They knew Spain was broke, and they were right. 1557, Spain defaulted on its debts. 1560, defaulted again. 1575, again. 1596 again. 4 defaults in 40 years. The currency collapsed. Inflation destroyed the middle class. Spanish power evaporated. By 1600, the Golden Age was over. Forever. 1600s. The Dutch Republic. The richest city on earth. Amsterdam. The Dutch East India Company was worth $8.28 trillion in today's money. More than Apple, Microsoft, and Google combined. ×2. Then wars, debt explosions, tulip mania asset bubbles. By 1690, major banking families were relocating to London. 1795, the French invaded. The guilder collapsed. The Bank of Amsterdam's fraud was exposed. The Dutch Golden Age ended in months. Okay, we've established the pattern. We've proven we're in stage 3. Now let me tell you what happens when stage 4 hits, because this is what you need to prepare for. The dollar gradually loses reserve currency status. Countries start settling trade in yuan, euros, gold, anything but dollars. It's already starting. China and Brazil are trading in yuan. India and Russia are using rupees. The BRICS nations, representing 40% of global GDP, are building payment systems specifically designed to bypass the dollar. When that happens at scale, what do you think occurs to all those dollars sitting in foreign central banks? Trillions of dollars that foreign governments don't need anymore. They come home, flooding the US economy. That's when inflation goes from painful to catastrophic. The Fed will face an impossible choice. Choice A, raise interest rates to crush inflation, but that makes the $38 trillion debt unpayable and crashes the economy. Choice B, keep printing money to pay the debt, but that destroys the dollar through hyperinflation. Either path leads to the same place. Asset prices crash because liquidity disappears. Stocks, bonds, real estate, everything deflates simultaneously. Banks fail. Pension funds go insolvent. Insurance companies collapse. It cascades like dominoes. And the middle class, People who kept their wealth in dollars, in dollar-denominated assets, in the safety of the American financial system, get wiped out. Savings evaporate. Retirement accounts vanish. Home equity disappears. This isn't speculation. This is what happened in Spain, in Amsterdam, in Britain. Every time, without exception. And before you comment, but America is different. That's what Spain said. That's what the Dutch said. That's what Britain said. Empires always think they're the exception. They're always wrong. So here's the question. What do you do? Because complaining about it doesn't help. Understanding the problem without acting is just expensive education. Let me give you 7 specific steps you can take starting today. Step 1. Diversify out of pure dollar exposure. If 100% of your wealth is in dollars and dollar-denominated assets, you're gambling. Consider assets that hold value during currency debasement. Gold has held value for 5,000 years across every civilization that's ever existed. Silver, real commodities, things that can't be printed into existence by central banks. Step 2. Geographic diversification. If major institutions are moving capital internationally, you should too. Not all your money, but some. Look into stable foreign currencies, Swiss francs, Singapore dollars, Norwegian kroner. Spread your political risk across multiple jurisdictions. Step 3. Understand the timeline. Based on history, Stage 3 lasts 18 to 36 months total. We're approximately 15 months in. That gives you somewhere between 3 and 21 months before Stage 4 potentially hits. That's not years, that's months. Use the time you have. Step 4. Increase liquidity. Keep accessible cash. Yes, cash loses value to inflation. But in a crisis, liquidity gives you options. Options to buy crashed assets, options to move quickly. Illiquid assets trap you exactly when you need mobility most. Step 5. Reduce debt. If you're leveraged right now, deleverage. High debt in a rising rate environment is financial suicide. Every percentage point rates increase makes your debt more expensive to service, and rates are structurally going higher from here. Step 6. Invest in skills and relationships. The one asset that survives every collapse is human capital. Skills that create value. Knowledge that solves problems. Relationships built on trust. These can't be inflated away. They can't be confiscated by governments. Step 7. Stay informed. The people who survive these transitions aren't the richest. They're the ones who see it coming. Let me bring this home. America's debt hit $38 trillion for a reason. It's not an accident. It's not bad luck. It's Stage 2 overextension coming to its mathematical conclusion. Foreign central banks are selling for a reason. They see what's coming. Major institutions are diversifying for a reason. They read the same balance sheets you can read. They see the same pattern I just showed you. We're in Stage 3, the capital flight phase, the silent exodus. The smart money is leaving. The warning signs are flashing red everywhere if you know what to look for. Stage 4 is coming. The mathematics are inevitable. The pattern doesn't care about American exceptionalism. It doesn't care about military power. It doesn't care about innovation. It only cares about fiscal reality. And the fiscal reality is unsustainable. The only question is whether you'll be positioned correctly when it hits, or whether you'll be asking, like millions before you throughout history, how you didn't see it coming when all the signs were right there in front of you. The information is here. The pattern is clear. The data is verifiable. Go check it yourself. Treasury.gov, IMF.org. It's all public. The choice is yours. Drop a comment below. Tell me what you think, where you disagree, what you're doing to prepare, and subscribe now because next video I'm revealing 3 specific asset classes that historically outperform during currency collapses. You don't want to miss it. Thanks for watching.